everyone. Is this mic working?
No.
Nope.
Testing, testing.
Hello? No? No. Let's try that one. Thank you. C'est bon? Génial. So, welcome everybody. My name is Madeleine Boyes. I'm the head of community of GBBC Digital Finance. It's my absolute pleasure to be back at the European Blockchain Convention today. Today we're going to be discussing building infrastructure for institutional crypto adoption and looking at what that infrastructure really is, and as well discussing the challenges that arise when trying to build and scale that infrastructure. Before we kickstart the discussion, I would love for my panelists to introduce themselves, please, if you wouldn't mind.
Hello everyone, I'm Vincent Dulhoste, I'm CTO of Kaiko. Kaiko is a company that was founded in 2014. We provide market data for digital assets to financial institutions. Our mission is to bridge the traditional and decentralized finance by providing reliable data from all markets and on all networks. And we do that by providing a range of products that comprise market data, analytics, indices, and research that power the investment decisions of our clients.
I'm David Engel. I'm head of business development for StarkWare. StarkWare is a layer 2 scaling solution. We have two platforms. We have StarkNet, which is our public blockchain, Turing complete layer 2, which means that it settles onto Ethereum. We can get into that if we want to. And then we have StarkX, which is a layer 2 SaaS scaling solution. So that means that we provide a set of APIs to exchanges and banks and NFT marketplaces. Customers include DYDX, SoRare, Immutable. We've done about $800 billion in volume settled on Ethereum, and anybody that wants to set up a self-custodial digital asset exchange that settles onto Ethereum, but is basically a permissioned app chain, would build on StarkX.
Hi everyone, my name is Rajiv Sainani. I'm a contributor at MakerDAO. I'm always careful to say contributor because there's no such thing as an employee at DAOs. The DAO governs the Maker protocol, which is one of the oldest and largest DeFi protocols. It's a lending protocol that's also behind DAI, the largest decentralized stablecoin. There's about $5 billion of DAI in issuance, and it's backed by multi-collateral types, including crypto collateral, primarily Ethereum and Ethereum derivatives, centralized stablecoins, which are a very important component to maintain the DAI peg, and more so, we're seeing the usage of real-world assets, which is driving an increasing part of our revenues.
Hi guys, sorry I'm late. It was too interesting upstairs. That's all right. My name is Glib. I'm the CEO of the Whitepay. We do the crypto solutions and the crypto processing for the business, for the merchants all over the world, offline and online. We started 2 years ago in Ukraine, in Kharkiv, and right now we are present in the 5 regions in the world and developing our infrastructure.
Great, thank you all for introducing yourselves. I'm really pleased to be here, and I think we've got a fantastic panel because you're all able to speak to different components of the topic of today's panel. So, David, would you mind if I kickstart the discussion with you and ask you your perspective on what are the key infrastructure components that are needed to build and scale the institutional adoption of crypto?
I think there's a couple kind of high-level components, like you need regulatory clarity, obviously you need the infrastructure. I think from a technical perspective, you need wallets, you need protocols to actually exchange the assets, you need order books, on-chain, off-chain order books on top of those, and then obviously you need the liquidity to fill those. And I think within this panel we've got a range of different protocols, data analytics providers, liquidity providers that kind of make up the overall landscape for the infrastructure.
Yeah, absolutely. And Rajiv, Glib, any more to add on that?
I guess in terms of what we need, I would highlight 2 things that sort of we've really experienced as pain points. One is legal frameworks and structures, especially to bridge between on-chain and off-chain. Like when you want to bring DeFi together with traditional institutions, it's amazing how much legal work is required when you build that bridge. And the other is actually efficient on and off ramps. Especially as you get into higher values, it's amazing how much friction there is in that process and how expensive it can become. So yeah, those are probably two that I would highlight.
And Vincent, anything there either?
Yeah, I mean, I can echo the comments about the ability to transfer assets on-chain, off-chain, between different chains, which is clearly a key component. And more generally, the composability of DeFi and making sure that the different components of the ecosystem can interact with each other in a seamless way to provide institutions with, I would say, a seamless experience in DeFi.
Yeah, very much so. Thank you. Well, we've said that the panelists can speak to different components about interacting with institutions and building and scaling in that sense. Glib, could I ask you to maybe elaborate on some of the recent use cases you have of those very interactions?
Yeah, thank you for the question. We recently, from the beginning of the war in Ukraine, we was lucky and well prepared to build the case with the Ukrainian government. So we implemented the crypto processing to the President Zelensky website U24 in 1 week probably or so, and collect more than 12 million in crypto for this fund and transfer it. So this is it was happening instantly. Beginning of the war, nobody thought about the regulations, legal stuff. Just do it, please help us. Government asks. And on that case, we understand that when the government needs something really bad, you want to talk to them, you want to help them, you can do it from the private part of the company. You can integrate on all of the services if they really need to. So right now we're building the similar crypto projects with a few governments in the European Union, and we develop our cooperation with the Ukrainian government as well, building the projects that are related to the state services that can be paid by crypto in the future. So I guess this is the only one use case in the world when the crypto company works with the government straightly and all on the different levels.
It's a fantastic example, thank you. I think it'd be really valuable for the audience to hear from all of your other use cases and examples. So Rajiv, can I just maybe ask you to follow on?
Yeah, it's actually great to see on the panel so many different use cases of crypto and just how it impacts in so many different areas. From Maker, I'll focus a little more on the use cases or the institutional use cases we've seen with real-world assets. I'd highlight everything is experimentational. I mean, we really are just at the beginning of this journey. And from Maker, it's probably a journey that's 2 years old. The roots sort of started very much in the crypto space. But with real-world assets, where there has been a lot of focus, I guess it's sort of there are 3 distinct waves that I would call out in terms of use cases. And the first really started perhaps a few years ago, where the institutions we saw were young pioneers, and we actually internally call them sort of the pioneer vaults, where we worked with young, innovative companies. A great example is Centrifuge, who's a decentralized financing protocol for real-world assets, where Maker was able to participate as a senior lender in various lending pools that are based on DAI. And in turn, that funding becomes available to institutional asset originators who are specialists in particular segments. So the use cases of providing finance for things like trade finance, real estate, bridge loans, and those were sort of the first early experiments that formed a little bit of our learning. Last year, we saw another wave, and it was really interesting to start seeing regulated financial entities start to express curiosity and a desire to experiment with DeFi. And again, it's sort of small value experimentation. But we had two very different use cases, one with a US commercial bank and one with a French regulated entity. And not to spoil too much detail there, because we'll be talking about that tomorrow together in a panel called When DeFi Meets TradFi. Loads of learnings from both experiences. What we did learn is this stuff is not easy. It takes loads of time to build these bridges and to get regulated entities comfortable with the paradigm and the constructs of working with a DeFi protocol. But the learnings we took were, you can do it. As I mentioned earlier, it was amazing how much work was required on the legal front, and that's probably where most effort was put in. And it was actually very different in both use cases. So, you know, the regulatory environment in the US, very different to France, and we had to cater to both. So that was the second wave. And then the third wave, which I think is sort of what we're seeing now, it's actually a bit of an inverse of what we've seen for many years of capital flows from TradFi into DeFi. As a DeFi protocol, we recently announced that we made an investment in a very traditional TradFi instrument, a US Treasury ETF. And again, the learning is it's not easy to actually deploy capital from, you know, an on-chain protocol into this off-chain world. But we figured out elite structures that have allowed us to do so. And I think a lot of our focus this year will actually be on similar investments, especially with money market funds. And I think what's missing actually in the industry, you know, we're having to build bridges, but as the industry starts to build more products natively on chain, that's when you start to see sort of the real scalability happen.
So mine's actually a story about the easiest business development I've ever done, unlike the work that you're doing, which is really kind of very, very intense, long, you know, pretty complicated efforts. So about 3 months ago, I went into work and we had an email from Visa saying that we have built a proof of concept on StarkNet using account abstraction. Would you guys like to hear about it? Which is, for anybody that's ever sold into any financial service institution, is absolutely unheard of to actually hear about the project after it's already done. So what Visa did was they took basically a solution called account abstraction, which you can do on StarkNet. A very simple concept is it's like a smart wallet. So if you think about a wallet on Ethereum, let's call it a dumb wallet. So you can point from A to B, and you can only do push payments. So I say I want to send money to Madeleine, and I push the money to Madeleine, and that's all you can do. What account abstraction does is it turns a dumb wallet into a smart wallet. So it's basically a fully programmable wallet. And what Visa did was they built a very simple POC to be able to do recurring payments. So if you think about what a subscription is, where I agree that I subscribe to an online magazine, and every month they're just going to pull money from me. Well, you can't actually do that using an Ethereum wallet. So even if you want to build on Ethereum and you want to build some sort of advanced wallet functionality, it simply doesn't allow you to do that. And Visa recognized that wallet infrastructure and building kind of more Web 2-like wallets is actually one of the most important things to be able to on-ramp people into crypto and into the Visa or the Ethereum ecosystem. And so they went ahead and built it and then told us about it afterwards. And I think that now it's pretty well known, and I think that there's a lot of opportunities from it. But I think that what we are seeing is that you actually now have enterprises that are actually taking the initiative themselves, which you can do with permissionless blockchains. You can go and you can build whatever you want. And I think what we're seeing, especially with account abstraction and making it easier for people to do things like key recovery, removing the need for seed phrases, being able to do Face ID to log into your wallet, are all really important innovations, both in terms of actually onboarding the next billion users, but also in giving enterprises or institutions the tools to actually deliver user experiences that previously were simply not available.
Thank you, David. On our side at Kaiko, we work a lot with financial institutions, covering the buy side, but also the sell side. And on both sides, it ranges from supporting them creating investable products, by providing benchmark rates so that asset managers can create mutual funds, they can create ETFs, ETPs, they can create structured products, whatever derivatives has a digital asset as an underlying. So with our benchmarks, with our prices, we enable that adoption by the buy side. Obviously, we support them in the whole investment life cycle, starting from pre-trade, analysis of the assets, assessment of the risk, of the implied volatility, to post-trade, strategy, backtesting, all the way to middle office, controlling the risk, calculating the value at risk, and providing official, numbers to calculate the performances. So we basically empower them throughout the whole life cycle. We also work with banks in tokenization projects of real assets. We act as an oracle to extract market data from traditional finance and bring it into the blockchain to allow the execution of a smart contract for those tokenized assets. And we also work with regulators because obviously regulators will need reliable data to, for market surveillance. And we provide not only the raw data that we collect, but also contextualized data that allows to explain, what's happening on the market.
Well, thank you all for sharing your use cases and insights that really showcase the potential, but also the challenges that arise when interacting with institutions. Rajiv, I don't want to spoil the fun for tomorrow, but if you wouldn't mind elaborating a little bit on the challenges that arise when bridging TradFi and Web3 infrastructure, I think that would be really helpful for the audience moving on.
I think one of the big ones, and I think actually this is a bit of a responsibility we have as an industry, is that there's a real lack of understanding of the on-chain paradigms when you move into the large institutions. So you've got the innovative digital asset arms who are actually very keen to experiment and work with the industry and get innovative. But it's when you go downstream in these institutions into the legal departments, the compliance departments, that there's sort of huge pushback, and that's where actually a lot of the work is required to help the institutions go on a journey to understand the potential of this new technology. So that's certainly a challenge. I think another one is, unfortunately, that there's a bit of perhaps a trust issue right now in the industry, considering all the recent events. As much as I think people are beginning to trust the technology, perhaps there is a bit of a lack of trust in the existing players, and I think that's just going to get better over time. I think it's actually some of the recent events are going to force a clearer regulatory environment, and that is another challenge. Everybody wants to play by very clear rules, but it's not so clear what those rules are. So the tech has always been the easy bit, and especially when you get two good tech teams from both sides, from TradFi, DeFi working together, that's easy. The challenges, I think, are sort of more around the acceptance of what we want to do. And I think, to me, it's become very clear, everything we're doing at this stage, it is experimental in nature. It's proof of concept. The scaling of this on a large scale, it's going to take some time.
I think one other thing is that the business model of building a kind of a solution targeting institutional finance for blockchain is very challenging, very challenging. The volumes are small relative to centralized or decentralized exchanges. Just as an example, we do about $1 billion in volume a day through our derivative exchange customers. We've done up to 17 billion in a day the volumes that institutional finance is doing is very, very small. I mean, I think JP Morgan has been public with their quorum solution. They're doing about $1 billion a day in volume. The repo market is tens of trillions of dollars. So it's there's all the regulatory challenges, there's all the legal challenges and things like that. It's also really interesting to try to build like an actual real business case around actually selling to institutional finance. And I think it'll get better. Like we're already seeing it get better. We're seeing more volumes. We're seeing companies being, I guess, more bold in terms of putting more liquidity on the blockchain. But I think overall, you're probably going to see a lot of businesses kind of try and fail just because the business model doesn't yet stack up.
That makes a lot of sense. And Glib, I was wondering if you might be able to share your experience interacting with governments. I know that's a little bit different compared to what we've been talking about in terms of bridging TradFi and Web3, but if you have any particular insights from your work with a government, that would be great to hear.
I actually wanted to start with Web3 because I got a funny situation a few months ago. I was attending a conference in Copenhagen, and we have the same panel. And the moderator asked me how you will modify your project to the Web3 and how you're going to enter this era of this internet. I was thinking about for like 2 minutes and then realized that I already done it like before the hype. So we provide in crypto solutions to the merchants. They can accept crypto. They can be in the crypto or withdraw the funds to bank accounts if they need to. And the users can pay with their crypto, not with the banks, not with any centralized institution, just with their own money to the merchants to keep their own money. And I'm like, So I already done it, kind of. I don't have Web3 in any of the marketing materials and stuff like that. Maybe I should do that. Be up in the Google search or something like that. But yeah, it was kind of funny. So we kind of already done it. The future is that the people gonna pay with the crypto, I think, and building those bridges with the governments and with the retail is very important because nobody know how to tax the crypto, right? Nobody know how to ramp it from crypto to the fiat properly, so your bank will not block it and stuff like that. So nowadays, what you can do with the crypto is just withdraw it through some third-party service to your bank card and hope that it will not be blocked. But we're trying to change that to let the people pay with the crypto and consulting the government regarding how this world works, where you should tax the people, that the crypto investors can be 2 years in the minus position for a couple of mil. It doesn't say that you need to tax them for those money. You should wait until they made some and then tax. So we explaining to them the basic things, how the world works, like how you will explain it to a child. And it eventually will work. So in that manner, in that tight cooperation with the institution, with the governments, with the big retail merchants, they got thousands of people in the management and the decision making, and you need to explain it to them like very, very calm and polite that you can accept crypto in your country. It's okay. You will not be sued for that as long as you pay taxes from the income. It's all right. And you do that service to them, you take in the licenses, you try to be regulated to bring that future of the payments to our next generations probably, or our generation.
Just a quick point on that, because I saw a lot of interest. I spent many years living in Brazil, and I mean, huge economy, very closed, but I believe they recently announced the ability for citizens to pay taxes in crypto, which I thought was, I mean, it's just huge. So I think it's going to be baby steps, but it's really encouraging to see an economy that big actually take a positive step forward. I don't know much details, but yeah, big headline, I thought.
Yeah, absolutely. And I think a lot of what you're alluding to is about building trust, but Rajiv, you were talking about how institutional trust has been affected in the past year, and I wondered if, David, you might be able to elaborate on how rather the player narrative, but rather building infrastructure in like solid and resilient infrastructure is going to be part of rebuilding that trust?
The challenge is that institutional infrastructure is very good, is very, very strong. I mean, SWIFT network is sending trillions of dollars a day. The interbank networks are good. It's very easy for a bank to send to an international settlement bank. So the infrastructure is incredibly robust and strong. So replacing that, I think, is very challenging. You got to find the reasons why. I think one instance that I think we're going to start seeing a lot more of would be like in the FX markets or in B2B payments specifically, where there is, when I say FX, I mean institutional FX. I don't mean retail. But where there is, very large value of money, very low retail risk, instant settlement, much lower cost, much lower back office infrastructure required. You need fewer people. If you're settling on blockchain, it settles like that. So all of a sudden, you don't need a couple hundred people validating and verifying compliance. So I think we need to be very precise in terms of what are the areas that we think will be replaced, and then if they're going to be replaced, what's the upside? And so I think where you see large flows of money between international banks, so sending from one country to another, that makes a lot of sense for blockchain. Where you see payments, like merchant payments between countries, that also makes a lot of sense. I mean, if anybody has run a business and tried to buy a product in another country, it's multi-day settlement. It's often there's the very expensive exchange costs. So I think we're starting to see different pieces of infrastructure for that pop up. Stablecoins, obviously, you want a protocol that you can trust. Preferably a decentralized one. I think self-custody is going to become very important. So the ability to, for merchants to custody assets on their own, but do it in a way that really significantly reduces the risk of losing it. Like being able to self-custody in an Ethereum wallet with a seed phrase is actually a pretty shitty experience for a business owner. But if you can do self-custody and they can have, they can have faith that, if they lose their key or their seed phrase, that they can do a multi-sig and that they can have, 4 other trusted people, whatever, 5 sign for it, then I think that will be replaced. So, yeah, I mean, I think basically we will see pieces of the infrastructure being replaced, but it will be very selective and it will be slow and it will be where we see the highest value accruing because it is on the blockchain.
Yeah, that makes a lot of sense. And Rajiv, maybe if you have anything to add on that front, since you led the segue into the discussion.
I think we're going to see a lot of new names run experiments and proof of concepts in the crypto space. I think a lot of institutions are building out teams that they're very early in their internal education, and I think that's going to lead to the discovery of, where are these areas, where are these sweet spots that it makes most sense to embrace this new tech. And I completely agree with what you said earlier, but building the business case is one of the big challenges they have. I think emerging markets actually has a lot of opportunity because there's a lot of inefficiency and very badly served segments in financial markets over there, which I think, perhaps gives a nicer starting point for crypto, perhaps, if regulatory frameworks allow that. But yeah, stablecoins, I think, is another area. I'm surprised we've not seen some of the big names announce anything, but I really and even from some of the conversations I have with institutions, it's very clear they are gearing up to make moves in the segment, and actually just in the last few days, I've been reading about acquisitions from big names. So I think we'll see a mix of acquisitions and build, and that's going to drive a huge new wave of new names in the space. And tokenization is the other big one. I mean, so much happening there. So
there is indeed. There is indeed. I think when we're talking about the biggest challenges as institutions move into that space, and whether it's from acquisitions or building out their teams, I think conducting institutional finance on a public blockchain is probably one of the biggest stallers in terms of the effects of privacy and confidentiality. And I was wondering if, Vincent, you might be able to share your thoughts on that a little bit.
Yeah, and there's a few challenges. There's an educational challenge first. which is to get institutions to understand that the permissioning and privacy capabilities of a blockchain, it is possible to deliver a secure service on blockchain, but there's a lot of education to be done, with the institution, reminds me a little bit. I've been 25 years in traditional finance, and reminds me a little bit of the transition to public cloud. 15 years ago, no bank would want to hear about the public cloud. It's insecure, it's not reliable, and here we are exactly on the same path. Hopefully, in less than that, no one will, it will be like a done deal. But yes, there's a lot of education to be done now. You were mentioning the business model. There's a change of business model as well. When today traditional institutions mark up their infrastructure costs in their own service costs. On the public blockchain, it will be the end user paying gas fees. So that's a little change as well. They have to get used to. Speaking from my own perspective, there's a big data transparency challenge where institutions need to better understand and better control what they're doing when they invest in crypto. The last one, and maybe I'll let David elaborate on that, is more on the infrastructure, reliability and scalability. We need to show a secure infrastructure, get SOC 2 compliant, show best practices in terms of security, governance. So that's quite a lot of work ahead, but a good opportunity as well.
It is.
I'm slightly more bullish on institutions building on public blockchains, specifically Ethereum. Most of the institutions we talk to are basically have moved away from permission blockchains. I think that they recognize that they're not really decentralized, they're not really that secure. We're seeing almost to an institution the desire to build on Ethereum, but there's one really big problem that they can't yet overcome, and that's the confidentiality of transactions. So obviously a public blockchain is exactly what it sounds like. It's public. Your transactions all appear on the public blockchain, and you simply can't do that if you have counterparties that are trading, hundreds of thousands, millions, billions of dollars. They don't want to be front run. They don't want their transactions public. Like, it makes perfect sense. It's a commercial issue. So that's what the big issue that we're seeing. StarkX, our layer 2 SaaS platform, as a happy coincidence, solves that. So we built something called Validium.availability mode. The reason that we built that was that it's very expensive to settle transactions on Ethereum from a layer 2. So we built the ability to send the transactions off-chain, and then you have a availability committee that will basically send a signature on-chain to sign for it. We did that because it's cheaper. It's simply just cheaper than putting the transactions on-chain. What we actually didn't even consider is that actually by sending the transactions off-chain, but having a proof that the transactions are on-chain, as your knowledge proof, you're actually still getting the Ethereum level security without actually revealing the transactions. And so all of a sudden, we started having these banks reaching out to us and saying, oh, we hear about your Validium availability mode. Does that mean that we could actually build a digital asset exchange on StarkX? We still get Ethereum settlement, so we still get layer 1 security, we get layer 2 scalability, but the transactions actually stay confidential. We're not revealing our customers' information, and it does that. So I think that now that we have an ability to actually remove the risk around confidentiality, what I think we're going to see is a lot more, I think experimenting, sure. We're much more interested in production workloads. But I think in the next few years, we're actually going to see more production workloads where we're actually seeing, multiple billions of dollars traded per day on the digital asset exchanges because they have the ability to still get, Ethereum security, but can keep their transactions confidential.
Rajiv, Glib, anything to add?
I know. We're built on Ethereum, and I'm watching with so much interest the innovation and that's coming from the likes of StarkWare, because that's the great thing about our industry is we're so early, so we're still learning where the issues lie, and with each year you're seeing them being fixed. So it's watching with a lot of interest what you're all doing.
I would agree that it's going to end up being a mixture of the experimenting that you mentioned, the production that you mentioned, and also I think the attitude and mindset that Vincent brought up around how, if you go back 15 years in the idea of conducting any kind of institutional finance on the cloud was foreign, and we're kind of at that same stalemate now. I think that everything that's been brought up today is like driving us towards us 15 years ahead, where that's not going to be so much of an issue anymore, hopefully. And I suppose for the sake of closing this panel on a positive note, Glib, maybe you could share your thoughts as to what you're looking forward to in 2023 and like the institutional adoption of crypto and what that means for your business.
I wanted to start off maybe with do you remember Ripple? When is the last time you checked out on them? Like a year ago, 2 years ago. But during that time that they realized how the government and how the bank works, they turned off all the marketing. They opened like 15 offices around the world and start to work with the governments and with the banks straightly. And right now, their team consulting Visa on the public blockchains. They implemented their blockchain more than in the 50 banks. I'm not promoting them, but this is how it should work, this bridge between crypto and traditional finance. You don't brag about that, and you just do the work calmly because you will need 10, 15 years to do so. And in this year and next year, I'm hoping that the institutions and the governments will open the doors for the crypto companies, and we'll see some major changes in the crypto adoption, in crypto regulations, and in the big names of the big companies and banks in the space that will consolidate and work with the crypto companies to improve their services. That's how I see it.
And I think we're all looking forward to it. So on that note, I want to say thank you for your participation. I've really enjoyed the conversation. And yeah, I'm looking forward to the rest of the conference.
Thank you
for moderating.